morning, everybody, and welcome to the Fred Report Technical Market Conference Call for June 2nd, 2011. Astoundingly enough, it is already June, and I'm in Chicago, and of course, every time I leave, the market does weird stuff, and yesterday does not seem to be an exception to that. So I guess let's get right into it. We've had a couple of questions. We'll deal with those first. I guess the first question has been, is the correction we were looking for in May going to happen in June, or I guess even better way of putting it is continue into June or July? And the answer to that question is it certainly could, but we're in a situation where daily indicators are actually showing some positive stuff. Now, the monthlies need to correct. That is true. And one guy asked us a question via email. It was very interesting. The question was, what about a mid-month calculation instead of an end-of-the-month calculation to determine, where the correction's going to stop? And, you can calculate the number any day you want, but there's a couple things about that. The first one is I've got history going back to the 1800s on this, and it's all end-of-month data, so you can't really change that, and it seems to work about the same on end-of-month data throughout that time. The other thing, the 1280-1290 number based on the close in June has actually changed. That number has moved up a little bit. The ideal close for June would be 1310 now on the S&P, which is remarkably close to where we are. So, the real question I have, since the monthly indicators did not correct a whole bunch, is what happens when the daily indicators get overbought once again? And you can see, if you look at a chart of the S&P or SPY, one of the ways to look at this is count the amount of points up when you get your stochastic below and above 20 versus points down when you get your stochastic above and below 80. And what you'll see is we're still seeing substantially more points when the S&P is going up rather than down, and that tells us that conditions actually remain bullish. Now, what we wouldn't mind seeing is a little bit more down, and then a decent lower close in June from here, but not extreme, and then a push up. But we don't have to see that. It depends on really what happens with these daily indicators, which have started to advance except for yesterday at the beginning of this month. So we're still sticking to this week being choppy and the cycles being down into this week, and then a rally attempt for 1 or 2 weeks. Now, the other thing that did occur is because the monthlies in May did not go down enough to spark a really good, strong summer rally signal, we may not have as robust a rally this summer as I previously thought we were going to have. We just have to watch and see. But for now, we're certainly not completely upset with where we are in the market. We're a little surprised that we got here in one day, but it basically seems to me this market certainly can trend a little bit lower and then come back up in June. We've been thinking this week would be sideways to down for a while. We were actually hoping that it would be a lower close in May than we got, then down in the first part of June and then up. You like to see on bars, by the way, some downward movement and then a close on the upward end of the range, and it looks like that is what is setting up to do here for June. So let's take a look at some other ancillary things that relate to that, and I guess the first one is part of our stock market forecast was that bonds would hit on the TLT 98 and then start to reverse, and that would be a sign then that the stock market could start to go up. And we note that the TLT made it to 97.72, which is very close to the 98 to 100 range. If we're off a little bit on that, then these bonds are actually peaking now, and that should set up for some stock market advance later in the month. Now, again, these bonds probably are not going to go straight down. They're probably going to build some sort of broadening top formation and go down. And so we would, but we're looking for that actively now. We're seeing some signs that that could occur. In the commodities, oil, for example, still looks like it's made a bottom, and as part of that bottom, it's obviously consolidating and retrenching. But we still expect a rally starting in June, which is this month. And the rally has actually started. We've gone from 38 to 39, 63 on TLT. we think that can ultimately get back up to 43, 44. We would be looking for that to occur. So, we're interested in the oil market. GLD is leading SLV, which is what you like to see. It may not make appreciable new highs right away, but we're going to maintain our 169 target on GLD or 1690 an ounce on gold, whichever occurs first. That is now an 11-month target, and as long as gold leads silver, we think that there's a very good chance of that happening. When we take a look, by the way, at the basic commodity index, the DBC, it filled its gap at 3060. The stochastic on the daily is turning over. If we can get that stochastic on the daily down a little bit without the market falling apart here in terms of the DBC, then we could see our commodity rally, and that would be the guess that I would make is going to occur. So, in terms of the dollar, that's one of the real interesting areas to us, because part of our forecast for the second half of the year is the dollar starting to do well, problems in Europe, and commodities doing well in spite of that. When I look at the dollar index here, we're going to look at the UUP first, because that's the ETF attached to the dollar. Notice that the dollar index, as measured by the UUP, has come back down about halfway from the peak that it made a few days ago, and the stochastic has actually come down rather neatly and is now below 20 once again. If that stochastic turns up above 20 and the dollar starts to go, this will be one of the first times we've had a higher low on the dollar when the stochastic has gotten overbought and then oversold again since the peak in the dollar back in January 2011, and that argues for a move up in the dollar, which would fulfill that forecast. Now, my favorite speculation here in terms of contrary opinion type trades is actually buying the dollar. The real question is, are we going to buy the dollar and then see the stock market go ploop, or is the market and commodities and the dollar all going to go up together, which is our guess at this time. In terms of stocks and ETFs,